Probably not a surprise that the sell-off has gone pretty much to the 50 pullback trade there. See how that's the exact halfback trade narrative? And the reason why it's gone back to that price is that the structures are relatively strong on this one. You can see that the structure has the 25s in here, which gave you a good idea about the top edge, pullback trade levels, and so on. Great trades, lovely areas, and a very, very solid structural narrative for anybody to lean against, simply by spending 2 seconds of putting a couple of levels on your charts. You've already found those great areas. As we go into valuing the markets, one of the things that we're always asking is, well, what does the skew guys make of it? Where's the smile or the frown? And you know, when we start asking the various questions about where's the tail, we start asking questions about where the tail is as well. Well, this is the tail ETF. You can see that the tail, very bullish for equities, isn't it? There hasn't really been a lot of people getting involved in hedging their risks to the downside. So must be confident that this is a relatively bullish looking market on drips to the downside. So I think that's pretty obvious, pretty apparent that people are still quite keen on the long side of this market, bearing in mind they've been keen on this ever since the market rallied in the first place, way back in the middle of March. A very nice upside. So you can see these key levels have been very, very instrumental in how trade has evolved, especially from yesterday's lower dip into this break price here. And then the break back off that price. It'll be interesting to see how they trade this morning. We'll get some early reads as much as possible into the cash open. So tail risk looks good. When we're looking at these things, we're always asking various other questions. We're asking about the price of volatility, the gamma, for example. You can see the gamma was incredibly, bullish into the bottom edge here. When we look at the gamma into the bottom edge here, we can see that there is a huge amount of upside potential. Well, that upside potential was continued on this same pullback previously. See a brilliant opportunity to buy into what is a very divergent bottom edge. So this looks reasonable, doesn't it? The amount of gamma that's here at yesterday's close suggested that we should be able to take out the high prints of these price areas here at 44.72. That seems to be the reasonable outcome from this gamma line, which obviously is the VVIX. Yeah. When we look at that, what else do we ask? Well, we ask about the price of or whether they're hedging the markets or not. We look at whether they're hedging the markets, and you can see that the hedgers are certainly not connected to the downside just now. Very, very little hedging into the downside. One of the strongest pieces of information that you can bring to your charts. You can literally see that they were buying every lower low right through the whole previous 2 days. Pretty good information. It doesn't feel like it at times when you're looking at it on a 1 minute chart and all you see is a big sell-off trend like this. Remember, it's your time frame of reference. The big boys are maybe looking this from that 30-minute perspective, that 15-minute perspective, and this is just simply a small pullback into a bottom edge. And this whole area represents a buying opportunity for the big boys to get some skin in the game. And obviously the takeaway from that trade is great, absolutely fantastic, lovely outcome. Well, not very much has happened since then, but market seems to be overall very, very bullish, doesn't it? Very bullish indeed. How does Warren view the markets? Well, Warren was very bearish in the early stages of this top line. So Warren came in very, very heavy on the short side. And it still has a very negative rotation attached to this whole move so far, hasn't it? But they've stopped selling. At least that's something. They've stopped selling into this It's always better if it's in line with us rather than against us, of course. But it certainly is still very bearish, something we should bear in mind, that the market has a definite negative bearish rotation on a macro scale basis. And if we don't pay attention to that, we could end up getting ourselves a little bit back to front. Yeah, got to be careful, guys. You can see with the Warren line, they've been bearish literally the whole of 2022. You know, from the high price over here, you can see that the whole idea of the Warren line is these macro swings. And these guys have been selling 48s, 47.50s, and then again this previous swing highs up here, back in short 46.10s, and still relatively short. As I said, it'd be nice to put the Warren line in our favour as well, but unfortunately we don't have Warren running with us. We've got it running against us. And that's obviously significant because we like to always see what Warren line does. When we look at Warren on a 1 hour chart, you can see that Warren has an incredible ability to predict relatively big swing moves. And again, we can see that the Warren line making a big bullish pop was giving us a big buy trade in here. The top edge was visible, the top edge pullbacks were visible. Warren has not been bullish since during that period. So it's a good thing to remember about the background. Other things to remember are things like the quality spreads. The quality spreads have been incredibly bearish for a while now. That's going back all the way through September, October, November, December. And a lot of that is a function of interest rates moving. So rather than specifically commercial capital risk, it's more a function of interest rates moving, which gives us a little bit more of a sell-off read. So I like what we've seen so far. I think we've seen a lot of good stuff.